And when we look at that economic data, Bitcoin's already priced it in. It's already priced in, weaker than the economic data itself. So what are we fearing right now? What are people worried about?
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal dives into the explosive banana zone, where crypto moves get wild and fast. He breaks down what's coming next, so stick around. This ride is just getting started.
People are worried about what they're doing is creating narratives for today to explain liquidity conditions from 3 months ago. That's the ridiculousness of what goes on Twitter all day, is the lack of understanding of what actually drives these markets. What are the dominant factors? The dominant factor is financial conditions, which lead liquidity, which lead markets. And even in markets, it's gold actually follows financial conditions the closest. Then with a lag, it becomes crypto and tech. Then with a lag, becomes the S&P 500, cyclicals, commodities, all of those things. So people are talking about recession now. We've had this negative GDP print. A lot of this is technically driven by the imports that are happening to load up on inventories as tariffs come, so people don't have the price shock. Okay, fine. So most of this is going to get unwound. Why? Because global growth is about to pick up super fast. So the Philly Fed, this whole presentation was put together a week and a half ago to send here, so it's all out of date. So the Philly Fed latest numbers came in exactly as predicted by us, by this chart. It's actually quite useful because I just went through this deck this morning and all of this was from 2 weeks ago and it's all proven to work. So Philly Fed comes down now. So what we should see is now an increase in economic activity going forwards. So the back end of the year is going to look very different than the first quarter did. I use a lot of technical analysis. I even do it on economic data, which is abhorrent to most people, but it's worked for me for 35 years. And I use, this is a system called DMARC indicators. And basically it's telling you that we should see the economic surprises starting to rise. Bitcoin is led by financial conditions here by 3 months. The year-on-year rate of change of Bitcoin, we should start to see very dramatic movements in the price of Bitcoin going forwards. And I'll show you a bit more about this in a sec.
Michael Saylor recently compared Warren Buffett's Berkshire Hathaway to Bitcoin, calling it the Bitcoin of the 20th century. The statement came just as Buffett announced he'll step down as CEO by the end of 2025, ending a legendary 60-year run. Under his leadership, Berkshire grew into a $1.1 trillion powerhouse with a 20% average annual return, far outpacing the S&P 500. At 94, Buffett said he's ready to pass the torch to Vice Chairman Greg Abel, but will remain involved in key decisions. During the company's annual meeting, Buffett shared concerns about the weakening U.S. dollar and hinted that Berkshire might diversify into other currencies if economic issues arise. Though a longtime critic of Bitcoin, calling it rat poison squared, Buffett's firm indirectly holds crypto exposure. Berkshire has stakes in firms like Bank of America and New Holdings, both involved in the digital asset space. Ironically, despite his skepticism, Buffett's legacy company now stands closer to Bitcoin than he might admit.
And to go back to that idea that the Trump cycle is repeating, I mean, it's an incredible repeat, but more powerful even than 2017. Those of us who were in crypto in 2017, that's when I made the mistake around this time of year, thinking, you know what, I'm going to sell my Bitcoin at 2,000. I bought it at 200 in 2013. It went to 20,000 at the end of the year, and I felt like a complete moron. And I managed to buy it back in the sell-off in COVID, and I bought it back at 6,500. So I sold it at 2,000 and bought it back at 6,500. That's how not to do things. That's called fucking it up. And so I'm trying to teach you how not to do that. So the dollar, Trump last time around, same thing. The market's priced in tariffs. The dollar screamed higher. It created this weak patch of growth. Trump came out and said the dollar's too high. Guess what? Scott Bessent, who's a macro hedge fund manager, I've known him for 20 years, 25 years. He understands the game. Trump said the same thing. Everyone said the same thing. The dollar's too strong. and hey presto, the dollar has utterly collapsed. And we haven't started yet. And it's a cyclical thing. It's not the end of the dollar. That's another narrative you read. There can't be the end of the dollar right now because 87% of world trade is in dollars and 50% of the entire world's debt are in dollars. So that's 200% of global GDP is actually in dollars. So there's a shortage of dollars globally, and that won't go away for a long time. So the dollar's collapsing. This kind of thing is a massive tailwind. As the dollar weakens, it means that the more global exports pick up. Everybody who's a foreigner who services US government debt, it's cheaper to service the debt, costs them less of their domestic currency cash flows. So it's a very powerful setup. A weak dollar is incredibly good for world growth. It allows China, everybody else to start exporting. The whole world economy starts picking up. The last time this happened, the Trump cycle, well, that was the initial correction that we got. We had this whole period of correction, much like we've had now. It stopped in about March. Well, we got to about April. And then we did this. And from that correction low, it did a 23x. Now, I don't expect Bitcoin to do a 23x because this was much earlier in its adoption curve, but some of the others will, something close to it. We've got a perfect setup, one of the best setups I've ever seen, because we know the debt has to be rolled. We know the forward-looking liquidity is coming, and we know how assets react to it. Just like having a crystal ball. Nothing will be perfect, but directionally, it should be right.
Bitcoin is heating up again, recently pushing past the $97,000 mark and climbing to its highest level since February. With prices up 30% since April, many believe the road to a new all-time high is already unfolding. One major reason behind the rally is the shrinking supply of Bitcoin on exchanges. Currently, only 1.42 million BTC remain on centralized platforms, the lowest level in more than 6 years. At the same time, over 18 million Bitcoin are being held off exchanges, showing that investors prefer to hold rather than sell, setting the stage for a potential supply squeeze. Another powerful driver is growing demand from both retail and institutional investors. Bitcoin ETF have seen strong and steady inflows, adding over $40 billion in assets. BlackRock, Fidelity, and ARK Invest are leading the charge, and global interest is expanding as countries look to diversify away from the US dollar. This rising demand, paired with falling supply, is a classic formula for price acceleration. Finally, Bitcoin's technical indicators are flashing bullish signals. It remains above a key upward trend line, has broken important resistance at $88,690, and is holding strong above its 50 and 100-day EMAs. With momentum building, analysts believe a run toward $100,000, and even beyond, could be just around the corner. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.